Are the markets going to get sucker punched by the Fed? In my last video, I pointed out that we've had a run up on the 4,100 area of threshold on the S&P 500. We got there 3 times, but only one of them was a dominant peak. And we got that one 49 days ago. So we're going to find out really soon if that 49-day ago peak at 4,100.94 was actually the very top. And since then, we've been in a downtrend. That'll be the case if we don't break that area soon. The last time that I predicted that the market would officially break over the recession resistance wall, the reason why I did that is because we had gone up against it a number of times in a very short amount of time. And the following week, we saw it break right through. Well, that's what I'm considering right now. That short period of time that we need to make an attack on the 4,100, it's just getting longer and longer. So the markets need to move above 4,100, I think, this week. Otherwise, I think the momentum is going to get lost. The S&P, it bounced 5% in January, but the question is, can it bounce higher from here? Do we have any clues which direction the market is going to go? I'm going to answer those questions, and I'm going to go over a couple small cap stocks. I also got a bunch of questions on the MACD signal I'm going to review with you guys. Welcome to the Stocks with Josh show. Say hi in the comments. Thank you for hitting the like. Subscribe and update your YouTube bell to receive all notifications if you want to get straight talk on investing, swing trading, and the market direction for stocks and crypto. Don't fall for scammers in the comments. They pretend to be me. If you need better tools to trade, go ahead and take advantage of the offer from the Moomoo investment app. They'll give you 16 free stock for opening and funding an account. Screenshot the deal for the exact details. I use Moomoo every day for their free level 2 data, their stock screener, and their 8 smart order types. I use them to protect my capital and to lock in profits. Plus, I host a community there called Stock Josh Fam. Salute to the soldiers of the chat. Click the link, get the free stock, start investing today, and come find us. All right, we got some important news this morning going forward to the FOMC meeting, and that was the wage data. U.S. labor costs, they increased, but they increased at their lowest pace in over a year. The fourth quarter wage growth slowed, giving the Federal Reserve potentially a boost in its fight against inflation. So wages have actually increased, but the rate of increase has slowed from its previous pace. So this is actually bad news for some because wages are not going up, but it's good news for the markets. That news turned the markets around this morning, giving more confidence to the bulls. Now, I don't personally think that this is enough of a change to avert the Fed's coming market sucker punch. Where is the market headed? Well, according to JP Morgan Global Strategist, they believe that this rally is going to fade simply because the recession risks are still too great. Market fears were only postponed for the month of January. But the fact is, these market fears are inevitable. So technically, I think we need to see that move up this week or it's not going to happen. But on the bullish side, this week is packed with catalyst events that could absolutely change the game. It could fire the markets up over that critical 4,100 threshold. We've got the Fed rate hike, we've got big tech earnings, and we've got the monthly jobs report. And any one of those 3 could kick these markets forward. Do we have clues about which direction that the smart money thinks the markets are going to go? The answer is yes. Smart money is positioning themselves in the options market, and that's pointing to a drop according to analytics from Spot Gamma. The recent market climb, they say, was driven by short-dated options as well as short stock covering, which pumps up the markets, but it adds the illusion of strength. This was all said by Brent Kochuba, the founder of Spot Gamma. He went on to say that, for example, traders were buying calls in Tesla, or they were buying daily momentum, and then they were quickly closing their positions after buying. Traders are not buying for the second and third quarter and beyond. He seemed to believe that it was an absolutely obvious prediction that the Fed will sucker punch these markets. That's what the options are saying, and the technicals are also clear, in my view. We're still operating on a lower low. until we break that 4,100. And at some point that is going to happen. And when that happens, then it would be reasonable for us to be bullish. But until that happens, it still remains a bearish market. I want to give you guys a quick update on Verb for those who are trading it or are interested in trading it. First, I still get a number of questions about this. I want to remind you guys it's not an investment grade stock. There's absolute reasons to be bearish. I personally doubt the credibility of the management because they claim that they would not dilute the shares, but they continued to do so. And then after doing that, they really overspent those funds. The amount of money that they raised last fall should have carried them all the way into January, but they actually had to go back and raise millions more because they were burning through cash like crazy. So this is the fact. As far as the technicals go, for me, the critical line of support is 17 cents. Now, I sold the bulk of my position when it ran up above 50 cents, and I made a beautiful 4K profit. But I still own some because I had some in another trade account, and to be honest, I forgot about it. My stop loss on those, though, is set at 17 cents. The reasonable target sale price moving forward would be potentially a swing trade to resistance at 30 cents. Now, I've said it many times. If 0.165 cents breaks, the stock is dead. Otherwise, these guys could be getting an M&A deal and the stock could shoot up again. Yesterday, I talked about WVE and I told everybody that it was setting up for a perfect swing trade and that I was in particular watching the MACD for a crossover. Today, we saw the WVE stock shoot up 10%. Now, I've seen a lot of people talk in the comments about kind of messing up this trade, and I'm going to take a moment to break it down. I'm going to go back to when I first mentioned it, and I'm going to talk about what I see in the coming 10 days, just so you guys can see the stock from my perspective and give you a clue as to what you should be looking out for. As well as I'm going to go over the very successful swing trade DRCT. I called that out a couple weeks back, and specifically, I want to show you guys the MACD on it as an example for the WVE. Get ready, we're going to go to class. Let's go into the charts. Okay, I'm just going to start you guys off on the Verb chart, and I want to teach everybody how to add indicators to their chart. I'm using TradingView right now. I'm looking at the daily candlestick view. It shows me about a year of the price action for Verb. If you go up to the top, you see the ticker VERB. A little bit over to the right, you see indicators. You click that. It gives you a little pop-up and you can search MACD for MACD. I choose the one that says moving average convergence divergence, and it gives that to me on the bottom of the screen. I thought I would just quickly use the MACD with a couple of stocks so that you guys could get a little bit of perspective of how to utilize it. Back here, when we called the move up on Verb from around 30 cents to exactly 89 cents, and I think it hit 88 cents, we see that down here on the MACD, that our blue MACD line, okay, it's bullish when it crosses over the orange signal line, and it's bearish when it crosses under it. And we see that after it crossed under, we see that run up to 88 cents, we see all the momentum left the stock, and it came all the way back down here. Yeah, when the MACD crossed over the orange signal line, but unfortunately in that case, it actually quickly passed back under, and we got this massive move down. Now, back here, we got a crossover, which was bullish on the MACD, and in recent days, we had this big spike up to around 58 cents, but now we've gotten this cross back down underneath the signal line. And it really could remain bearish for some time. This cross down, if you look, it's a very similar shape to the previous cross down that we got at 88 cents. So we got another one here at 58 cents, which means that this stock could continue down for quite a while. So we need to see something else in this stock to believe that it's going higher. Now, we did enter into this long period of sideways consolidation, which means that we could cross back over and continue the journey up. That's why I'm saying that the absolute threshold stop limit should be set to the 17 cent range from where it's currently at. If it were to drop down a little bit, you could set it as low as 0.165. But after that, if it drops, you got to let it go because it may come back to 10 cents. All right, now we're looking at Wave Life Sciences, stock ticker WVE. Again, this is the daily candlestick view. And I want to just take us back to the beginning of the trade. Previously, you can see that WVE came to this level and it bounced on top of this trend line for quite a while until it broke that trend line, right? It came down and it made a new bottom. Really, it found support on a previous level. And then it began to move back up. And when it broke back above this trend line that we had all of these touches on, okay, I just want to give you guys a little bit of understanding of support and resistance. When we broke back over and we came up and we back tested, it led to this very powerful move up, right? Now, this was the initial starting point of the trade when I brought it to you guys. We took a position, I took a position right here, okay? And as it went up about 30 cents, I created my stop loss and it sold me out of my position right around here and it came back down. Now, when it broke back through, I knew that the two other areas that we would find support would be this middle line right here and then eventually back here. So in the last time that this came back and touched this middle line, we got a nice little 60, 70 cent bounce. Now at this point, we're watching the MACD very carefully. And you can see that every single time in the past, we got the MACD going over the signal line, we enjoyed a nice run up. Okay, we've seen it here numerous times back here. So every single time we've had a run over, we've enjoyed a run up. Now, we're very close right here today. We've gotten the turn up and it looks as if we're going to get that crossover signal again on the MACD crossing over the signal line. And this could potentially lead us to a much bigger run up. Today, when we got this turnover right here, you can see it led to a beautiful 10% pop in the stock. I mentioned it yesterday. We got the 10% pop today. Now, this is likely the beginning of the move. So we got the bounce here. We're looking like we're going to get the crossover. This could be a bounce up that continues for days ahead. But the way that you have to play it is you've got to use a stop loss. So right now, the stop loss would be the bottom of the current candle that we're in. We're sitting at around $4.93. The bottom of that candle is $4.61. So my stop loss is set for $4.61. And as long as we do not break that low, I'm going to ride this out and hope that I get a nice, sweet gain. I hope that additional explanation of the MACD has been helpful to you. And just for one more example, let's look at the stock DRCT, Direct Digital Holdings. This was the previous swing trade that I'd given the group about a month or so ago. And I just want to point out that back in the early part of January, we got that crossover on the MACD, and that's what enabled us. We also had a trend line set. So I had two things set up. You cannot go entirely by the MACD. You want to use it in conjunction with other things like support and resistance trend lines. You see that on my WVE trade, I have both the MACD as a signal. I also have a support line drawn. So I told everybody about it right around here, and I said that it should likely hit my support line at around $2.50. But I gave you guys $2.50 because I wanted it to hit the support line and then begin to bounce off of it. If it hit the support line and broke through, well, then the trade would be dead. But it hit the support line, it bounced off of it. Most people got in at $2.50 who were trading it, and we enjoyed a parabolic, the move up to today. Now, I got out right about here, but this final move up has put those who stayed in it to 165% gain from when I called this out about 5 weeks ago. I just wanted to show you guys the MACD signal in this setting because it's worked for Direct Digital Holdings as well. If you see right here, we got the crossover in this range. It actually gave us a false positive reading initially. We didn't have a trend line here to work with. It gave us that reading. Then we got crossed underneath it at a little bit more sideways action down. But then eventually we got another crossover, and that led to this run up. Then we came back down. Now we actually had these two touches which gave us a trend line. We actually have about 4 touches there, 3 touches. That we got another crossover on the MACD, giving us an additional run up, and then it cooled off, right? We got some selling candles. We saw it cross back under, letting us know that that run up was over. And then we had these 2 trend line touches. We got the third right here. We got the crossover right here. We enjoyed close to over 100% gain. That's a little bit how to use the MACD in swing trading. Guys, I just want to remind you, every single day there is money making opportunity on Wall Street, but you need to do your own due diligence. Make sure that you have some cash available going into this week. Control your risk by controlling your position size. It's the last call to hit the like. Make sure that you are subscribed. Let me know in the comments if this MACD teaching was helpful to you, and let me know if you guys are bullish or bearish going into the week. Do you think the Fed is going to sucker punch these markets, or are we going higher? Thanks for watching to the end. Peace and blessings, my friends. I'll see you in the chat.